Hello, everybody. This is Jonathan Tran from Paramic Financial. We're back again with finance in 5 to 10 minutes. And earlier we did a little bit introduction on business planning and how to use business life insurance in our business. And so today what we're going to talk about in this topic is the buy-sell agreement of life insurance for a business. Now, many times, what is a buy-sell agreement? Buy-sell agreement actually is a legal contract between you and your partner or another entity that's looking to purchase your business under a circumstance. And you have a contract that will dictate what will happen if you were to pass away or your partner were to pass away, where the interests of the business go to after it goes to your estate, right? Now, a lot of times what will happen when we own a business is the first thing that happens, it goes to our estate, and who are our beneficiary of our estates? Our children, our family members. But a lot of times our family members may not know how to run that particular business. For example, you have a restaurant and it's a partnership between two people, right? You have a cook and you have an operation person. And just say that the operation person passed away and now their family is receiving the 50% share of the company, but the family knows nothing about operating the restaurant. But they ran a very successful restaurant, and the cook who's remaining back, he wants to retain the ownership of the restaurant. And so what they'll do is they'll go into a buy-sell agreement that says that, okay, what we will do is we will define what the value of the business is ahead of time on the agreement, and say that, to say that the business is valued at $2 million. So if something were to happen to one person or the other, the agreed price would be $2 million to buy out the shares of the company from the person who passed away. So in this case, if the operating person passed away and now the family comes in and they don't want the other family to get involved with the business, the buy-sell agreement will allow them to buy out the remaining family member's share. Now, how does that work between the two? What will happen is that person A will buy life insurance on person B, and person B will buy life insurance on person A. So there's a policy in between. So if something happens where the person A passes away, the policy that person B has will receive money from there, and they will use that money to buy back the shares from person A, vice versa, the same way. What happens if, something happens to that person? Either they pass away, their funding could be happen to fund the purchase, or maybe if that person became chronically ill or disabled, there could be some language in the contract in place to be able to draw money from that life insurance policy to pay money to the business or pay money to the other primary partner or the secondary partner being chronically ill or sick, right? So depending on how you design the policy, how you structure it, can give different benefits besides just the life insurance portion, right? So you can discuss it with your advisor, like what's important to you, what you want to be covered for, and they can always design a plan to make sure that it fits your needs. So that's usually how it works during the lifetime, right? They will pay premiums on each other until the event that something happens. Now, what happens if they ran a very successful business, they sold off the business, and now they're retiring, but they still have this life insurance policy? So what happens? They can do is they can exchange the policies to each other, so that way person A will exchange the policy with person B, and they now own their own policy, and then they can change the beneficiary to their family members rather than the opposite person, right? And B can do the same for the other person. Now, if something happened where went out of business for some reason and there's no retirement, they can still do the exchange as well, right? So that's how the buy-sell agreement will work. Very powerful tool to protect your business, right? Because you work really hard to build up your business, build a brand of your business. The last thing you want to do is have someone outside of building up your business come in and try to take over operations or take over the job that they think they can do but they really can't. And so the best thing to do is just to make them happy is, hey, you know what? If something happened to you, I'm going to buy out your family. We're going to agree at a certain price, and maybe it can increase over time depending on how the business does, but at least you got cash to pay them out, buy them out, and they don't have to affect your business in any way. So buy-sell agreement, very common. You can use it in businesses. You can use it in a purchase of like a real estate property as well, right? So anything that involves multiple partners, multiple business entities, you can use a buy-sell agreement to protect your business, and it's a great way for succession planning for your business. So I hope that was very helpful for you guys. Buy-sell agreement. You need to work with a lawyer to draft the contract, and you need to work with a financial advisor or your life insurance agent to develop and design the product side, and the two of them put together will complete the buy-sell agreement. Okay? Thank you very much for following us, and see the links below for the two other types of business life insurances commonly used. Okay, and make sure you guys like our video, subscribe and follow us, and I'd love to see more of you guys. Thanks a lot. Bye-bye.